In the late 16th century, Europe was standing at the threshold of an unprecedented transformation. The old order of feudal economies, bound by land, lineage, and local barter, was slowly collapsing under the weight of exploration, trade, and the hunger for profit. Amid this tectonic shift, one unlikely city would rise to preeminence, a small marshy settlement in the Low Countries, carved from the sea by human will and engineering. That city was Amsterdam. Its ascent marked not merely the emergence of a powerful trading center, but the birth of a new kind of civilization, one governed by credit, speculation, and trust rather than kings, swords, or divine right. This was the dawn of a financial revolution, and it would forever alter the trajectory of global commerce and human ambition. To understand Amsterdam's rise, one must first grasp the chaos that preceded it. By the mid-1500s, Antwerp, situated further south along the Scheldt River, had become Europe's most vibrant commercial hub. Merchants from Spain, Italy, England, and the Hanseatic League converged there to trade everything from spices and silver to textiles and timber. Its fairs and markets were legendary, its banks and exchanges pioneering. Yet Antwerp's prosperity was built on fragile foundations dependent on the goodwill of empires and the volatile tides of religious conflict. When the 80 Years' War erupted in 1568, ignited by the Dutch revolt against Spanish rule, Antwerp's glory swiftly unraveled. Spanish troops sacked the city in 1576 during the infamous Spanish Fury, massacring thousands and driving its merchant community into exile. When Spain later blockaded the Scheldt River, Antwerp was cut off from the sea, a death sentence for a trading city. The refugees who fled northward brought with them their capital, expertise, and international connections. They found a new home in Amsterdam, then a modest port town within the rebellious province of Holland. This migration was not merely demographic, it was intellectual. The merchants and financiers who resettled in Amsterdam carried with them the blueprint of a sophisticated trading economy, but they also adapted it to a new political and religious environment. The northern provinces of the Netherlands had embraced Protestantism, particularly Calvinism, with its ethos of discipline, frugality, and a moralized work ethic. Unlike the hierarchical Catholic monarchies of southern Europe, the Dutch Republic was a decentralized confederation of provinces and cities, governed by councils of burghers rather than kings. In this civic order, commerce was not merely tolerated, it was sanctified. Wealth was not seen as sinful excess but as evidence of industrious virtue and divine favor. It was within this ideological soil that modern capitalism took root. Amsterdam's geography also played a decisive role. Situated on the IJ Bay with direct access to the North Sea through a network of rivers and canals, the city became an ideal transshipment point for Baltic grain, Scandinavian timber, and colonial goods from the East Indies. The Dutch mastered shipbuilding, developing the Flight, a revolutionary cargo vessel that was cheaper to build, required fewer crewmen, and could transport more goods than any other ship of its time. Maritime technology, in this sense, was the physical infrastructure of financial innovation. Faster ships meant faster turnover of capital, lower risks, and higher returns. The sea, for the Dutch, was not a barrier but an economic amplifier. But geography and technology alone do not make a financial capital. The deeper transformation lay in the way Amsterdam's merchants redefined the concept of value itself. In a traditional economy, wealth was tied to tangible assets, land, gold, or physical goods. In Amsterdam, wealth began to take on a new, abstract form: paper promises, credit instruments, shares, and contracts. The city became the first place where wealth was measured not by what one owned, but by what one could command through trust and written obligation. This shift from material to symbolic value represented the true revolution, a mental one, before it was an institutional one. The political structure of the Dutch Republic further reinforced this development. Unlike monarchies that imposed taxes to fund their wars, the Republic relied on a system of public borrowing, issuing bonds to finance its defenses against Spain. Investors, many of them ordinary citizens, lent money to the government in exchange for regular interest payments. This democratization of debt created a financial culture built on mutual confidence. Citizens trusted the state to honor its commitments, and the state depended on the credibility of its citizens. It was an early form of what later economists would call social capital, the collective trust that undergirds modern financial systems. Amsterdam, during this formative period, became a laboratory of these new principles. The city's merchants organized themselves into guilds and partnerships that pooled resources for large-scale ventures. Rather than relying on royal charters or noble patronage, they financed expeditions through joint investment. Risk was distributed, and profits were shared according to predetermined ratios. The logic was simple yet profound. Collective capital could achieve what individual wealth could not. This model would culminate, a few decades later, in the founding of the Dutch East India Company (VOC) in 1602, the first joint stock corporation in history. But the mental groundwork for that institution was already being laid in the late 16th century. as Amsterdam's traders experimented with new forms of contractual cooperation. Religious tolerance also contributed to Amsterdam's exceptionalism at a time when most of Europe was tearing itself apart in sectarian wars. The Dutch Republic, though Calvinist in official character, offered relative safety to Jews, Huguenots, and other minorities fleeing persecution. Many of these refugees were skilled financiers and merchants. Sephardic Jews from Portugal and Spain, for instance, brought expertise in currency exchange and long-distance trade networks. They established banks and brokerage houses in Amsterdam, further integrating the city into global circuits of capital. Diversity was not merely a moral virtue here. It was an economic advantage. The coexistence of multiple communities created a cosmopolitan environment in which information flowed freely and innovation thrived. If Antwerp's fall was a tragedy, Amsterdam's rise was a calculated reinvention. The new Republic's leaders understood that economic strength was their only defense against the great powers of Europe. They invested heavily in infrastructure, canals, warehouses, shipyards, transforming the city into a logistical machine. The port of Amsterdam became the beating heart of European trade, where goods from across the world were stored, priced, and redistributed. Yet behind the visible spectacle of ships and markets, a quieter revolution was unfolding. The institutionalization of financial trust. The establishment of the Bank of Amsterdam in 1609 would later symbolize this shift. But even before its founding, the city's financial practices had already matured beyond anything seen elsewhere. Merchants maintained meticulous ledgers, transactions were standardized, and disputes were settled through civic arbitration rather than royal decree. Money itself, a notoriously unstable medium in a Europe flooded with debased coins, began to be abstracted into book entries and clearing mechanisms. In essence, Amsterdam was inventing the concept of financial reliability as a public good. Trust ceased to be a personal matter and became a civic institution. What made this transformation so profound was its scale and reproducibility. Amsterdam demonstrated that a city, not an empire, not a dynasty, could serve as the backbone of a global economy. Power, for the first time, was not territorial but transactional. The city's docks, warehouses, and exchanges formed a networked organism through which goods, credit, and information circulated continuously. This was capitalism in embryonic form, decentralized, dynamic, and driven by calculation rather than conquest. The Dutch Republic did fight wars, to be sure, but its most effective weapon was the ledger. To contemporaries, the rise of Amsterdam seemed miraculous. How could a small republic, lacking a king, natural resources, or vast armies, eclipse the mighty empires of Spain and Portugal? The answer lay in the redistribution of risk and the rationalization of profit. By turning trade into a system measurable, predictable, and insurable, the Dutch transcended the limitations of traditional commerce. Their ships sailed not only on the seas but on currents of credit. A voyage to the Indies was not a gamble. It was an investment with quantified expectations. The very language of enterprise changed. Speculation became a virtue, and profit a form of foresight. Yet there was a moral ambivalence at the heart of this revolution. The pursuit of profit, though disciplined by Calvinist ethics, gradually detached itself from the religious justifications that had once constrained it. The market acquired its own momentum, independent of moral or national allegiance. Amsterdam's prosperity was built on global trade networks that included colonial exploitation, slavery, and the monopolization of resources. The same mechanisms that enabled efficiency and innovation also facilitated domination and inequality. Thus, from its inception, the modern financial system bore the imprint of contradiction, universal in logic, yet selective in benefit. Nevertheless, the achievements of Amsterdam's early financiers cannot be understated. They created the prototype for nearly every modern financial institution: the central bank, the stock exchange, the joint stock corporation, the insurance market, and the bond system. But these were not isolated inventions. They were the emergent properties of a cultural ecosystem. What united all of them was the idea that trust could be engineered, that human agreements, when formalized into contracts and backed by civic order, could substitute for divine or royal authority. In that sense, Amsterdam's financial revolution was also a political one. It redefined sovereignty as a matter of creditworthiness rather than bloodline. By the early 17th century, this experiment had reached critical mass. Amsterdam had become the clearinghouse of Europe, its bills of exchange accepted from the Baltic to the Mediterranean. Interest rates were lower there than anywhere else on the continent, reflecting the market's confidence in Dutch solvency. Investors from across Europe sought to place their money in Amsterdam securities, regarding the city as the safest refuge for capital. It was as if the gravitational center of the European economy had shifted northward, away from the splendor of courts to the quiet efficiency of counting houses. The transformation of Amsterdam into the world's first financial capital was thus neither accidental nor purely economic. It was the culmination of a series of deliberate choices, political, religious, technological, and cultural, that collectively redefined what it meant to be powerful. In the medieval world, wealth was static, derived from control over land and people. In the new Dutch order, wealth was dynamic, generated by motion, exchange, and risk. The city's canals mirrored this principle. Water was constantly moving, circulating like capital itself. Stillness meant decay. Looking back, the dawn of this financial revolution represents one of the great turning points in human history. It was the moment when the logic of markets began to supersede the logic of monarchies, when ledgers became more decisive than laws, when credit became the true currency of civilization. Amsterdam's story is not simply about prosperity but about transformation, the conversion of uncertainty into opportunity, of trust into power. It marked the beginning of a world where money could move faster than armies, and where the fate of nations would be decided not in palaces, but in exchanges. By the time the 17th century unfolded in full, Amsterdam had already established itself as the prototype for all future financial centers. London, New York, Hong Kong, Singapore, each would inherit its structure, the blend of commerce, credit, and cosmopolitanism. Yet none could entirely replicate the conditions of its birth, that fragile, daring moment when a people, standing on reclaimed land, dared to imagine that prosperity could be built not upon gold or conquest, but upon trust. That imagination, more than any ship or coin, was Amsterdam's true invention. When the 16th century came to a close, the Dutch Republic was still a fragile coalition of maritime provinces standing on marshy land wrested from the sea. Yet within the span of a single lifetime, this improbable territory would transform itself into the most dynamic economy on earth. Its capital Amsterdam rising from a provincial harbor to the beating heart of world trade and finance. The process was neither accidental nor purely the consequence of geography. It was the product of an extraordinary confluence of commercial ambition, institutional ingenuity, and moral conviction that fused trade with finance, turning economic exchange into an engine of organized power. To understand Amsterdam's ascent, one must first grasp the peculiarities of its natural and geopolitical circumstances. Situated on the edge of the Zuiderzee, the city faced both the promise and peril of the sea. The Netherlands possessed no great reserves of natural resources, no fertile hinterland to sustain expansion, and no hereditary empire to exploit. What it did possess was a people hardened by necessity, skilled in engineering and seafaring, and capable of collective coordination to an extraordinary degree. Centuries of water management had ingrained a culture of pragmatic cooperation. Dike building, canal digging, and flood prevention demanded an ethic of communal governance. Survival depended on trust, consensus, and precision. These habits of discipline and mutual accountability, initially civic and ecological, would soon evolve into the mental architecture of capitalism itself. The first act of Amsterdam's transformation began with the sea, not the stock exchange. In the late 16th and early 17th centuries, maritime technology underwent a revolution across northern Europe. The Dutch fleet, a cargo vessel optimized for bulk transport rather than combat, epitomized the new logic of profit through efficiency. It was narrower in design, required fewer crew members, and could carry more tonnage per sailor than any ship before it. The flight turned maritime logistics into a science. Freight costs dropped precipitously, and with them came the democratization of trade. Amsterdam became the node through which goods of every conceivable kind, grain from the Baltic, wine from France, spices from Asia, flowed in an unceasing torrent. This logistical prowess coincided with the decline of Antwerp, once the commercial jewel of the Habsburg Netherlands. The Spanish siege of 1585 drove merchants, bankers, and artisans northward, carrying with them capital, experience, and cosmopolitan networks. Amsterdam absorbed these exiles and their expertise, like fertile soil welcoming new seeds. Within a generation, it inherited Antwerp's mantle as Europe's primary entrepot. But with a crucial difference: Amsterdam's economy was not merely transactional, it was systematically financed. At the heart of this transformation was the growing sophistication of credit and trust mechanisms. Early modern trade was perilous. Ships could sink, wars could erupt, currencies could fluctuate wildly, and thus required an intricate architecture of promises, documents, and instruments that could stand in for physical goods. Amsterdam's merchants mastered this invisible infrastructure. Bills of exchange, letters of credit, and promissory notes circulated in the counting houses along the Damrak, transforming paper into power. A merchant no longer needed to carry bullion or wait months for payment from distant colonies. A signed promise could mobilize capital instantly. These innovations were not confined to a small elite. What made Amsterdam exceptional was the scale and inclusiveness of its financial ecosystem. The city's civic institutions, its courts, notaries, and municipal archives functioned as guarantors of contract enforcement. Even relatively modest traders could access credit based on reputation and documented reliability. Financial trust became institutionalized, no longer dependent solely on personal familiarity or aristocratic backing. In this sense, Amsterdam democratized finance long before democracy reached its politics. Commerce in Amsterdam was not only extensive but also reflexive. The very act of trade generated data prices, cargo lists, insurance rates that could be analyzed and monetized. Merchants compiled ledgers of astonishing detail, while brokers circulated price currents, early forms of market bulletins listing exchange rates and commodity prices. These proto-financial reports gave rise to the first information markets. Knowledge, once diffuse and anecdotal, became quantifiable. The city itself became a vast organism of computation, measuring and monetizing risk on a global scale. This new commercial intelligence fed directly into institutional creation. In 1602, the Dutch East India Company Verenigd Oostendisch Company, or VOC, was founded not as a mere trading guild, but as a joint stock corporation with permanent capital. Its structure marked a radical departure from previous ventures. Instead of financing individual voyages, investors subscribed to an enterprise of indefinite duration, receiving tradable shares in return. The capital raised was immense, enabling fleets to be built, fortified posts established, and entire regions brought under commercial dominion. But the VOC's true novelty lay not in its maritime might but in its financial architecture. By dividing ownership into transferable shares, Amsterdam effectively liquefied capital. Wealth could now circulate with unprecedented velocity. Investors could enter and exit positions without dissolving the enterprise. The emergence of a secondary market for VOC shares traded openly in what became the world's first stock exchange transformed investment into speculation. The city's merchants, once traders in goods, became traders in expectations. The rhythm of profit shifted from the cycle of voyages to the fluctuation of prices. The impact of this financial metamorphosis rippled across society. A new class of intermediaries arose: brokers, speculators, underwriters, each specializing in converting uncertainty into opportunity. Insurance markets developed to hedge the perils of sea trade. Joint accounts diversified risk across multiple expeditions. The result was an ecosystem where maritime risk and financial innovation mutually reinforced each other. The ocean, once a domain of hazard, became a crucible of capital. Behind this transformation lay a moral and intellectual shift as profound as the institutional one. The Dutch, shaped by Calvinist theology, viewed labor, thrift, and enterprise as signs of divine favor. Wealth, when earned through disciplined work and prudent investment, was not sin but stewardship. This worldview sanctified commerce, lending ethical legitimacy to profit and accumulation. Combined with a republican political structure that valued civic responsibility and transparency, it created a fertile ground for trust-based finance. The city's reputation for honesty and stability became its greatest asset, a moral currency convertible into economic advantage. Geography, too, played its subtle role. The North Sea connected Amsterdam to the Baltic, England, and the Atlantic. The city's engineers transformed its swampy terrain into a miracle of infrastructure. Canals that doubled as transport arteries, warehouses with pulley systems designed for maximum efficiency, and docks capable of handling unprecedented cargo volume. Physical logistics mirrored financial order. Every barrel of herring, every bale of silk, was tagged, recorded, and accounted for each transaction, leaving a paper trail that reinforced systemic transparency. It was as if the city had encoded its moral economy into its urban fabric. Yet Amsterdam's success was never purely local. Its financial metabolism depended on a global circulatory system extending to Batavia, Ceylon, the Cape, and the Caribbean. Ships carried not only goods but also bills, contracts, and debts that tied distant markets into a single web of accountability. The VOC functioned as both merchant and sovereign, extracting tribute and monopolies that sustained the republic's fiscal strength. The dividends that flowed into Amsterdam's counting houses were not abstract profits. They were the material residue of empire. Global trade financed local credit, and local credit financed further global expansion. The transformation from port to powerhouse thus represented more than economic evolution. It was a civilizational pivot. Amsterdam demonstrated, perhaps for the first time, that power could be organized not through conquest but through contracts, not through armies but through accounting. Its city hall and exchange floor were twin symbols of a new form of authority, financial sovereignty. Here was a polity whose stability rested not on the crown or the sword, but on the credibility of its signatures. Nevertheless, this order was not without contradictions. The same instruments that democratized participation also amplified speculation. Share prices could soar or crash on rumors. Fortunes were made and lost in hours. The tulip mania of the 1630s, though later exaggerated, revealed the psychological fragility of markets built on expectation. The Dutch had discovered the power of financial abstraction, but they were also the first to confront its dangers. Trust, the invisible foundation of their prosperity, could just as easily become its undoing. What makes Amsterdam's ascent so historically resonant is that it foreshadowed the anatomy of modern capitalism. Every subsequent financial center from London to New York to Singapore has replicated its unmet fundamental formula: the marriage of trade and trust, logistics and liquidity, information and speculation. Yet in Amsterdam's case, this synthesis was still palpably human. Behind every ledger was a merchant's conscience. Behind every investment, a collective sense of civic duty. The city's prosperity was inseparable from its republican identity, its belief that private enterprise could coexist with public virtue. By the mid-17th century, Amsterdam's skyline had become the physical expression of this philosophy. The Exchange Building, completed in 1611, stood as a cathedral to commerce. Its open courtyard buzzed with the sounds of negotiation and calculation, while its walls bore witness to the rhythm of a world being financially synchronized. Just beyond, the warehouses of the East and West India Companies loomed like fortresses of paper wealth, their ledgers as vital as their cannons. The port was no longer merely a place of ships. It was a manifestation of a new economic consciousness in which movement itself became value. The city's ascendancy marked the moment when finance ceased to be a servant of trade and became its master. Credit determined the scale of voyages. Futures contracts set prices before goods even left port. The material world of commodities was subordinated to the immaterial logic of capital circulation. Amsterdam's merchants, in mastering this system, became the architects of a global economy governed not by emperors, but by investors. And yet, the genius of Amsterdam lay not in greed, but in governance. The city's financial institutions were remarkably transparent by the standards of their time. The municipal government monitored the solvency of brokers, regulated interest rates, and ensured that bankruptcy laws favored orderly liquidation over personal ruin. In this environment, failure was not moral disgrace but systemic feedback, a mechanism for recalibration. Such pragmatic regulation sustained confidence and prevented the corrosive chaos that often accompanies speculative excess. Thus, by the early 17th century, Amsterdam had achieved what few societies before or since have managed: the fusion of ethical discipline, civic trust, technological efficiency, and financial creativity into a coherent system of wealth. It stood as proof that capitalism, at its inception, was as much a moral enterprise as an economic one, a disciplined pursuit of order amid uncertainty. The city's transformation from a windswept port to a global powerhouse was not a tale of chance or mere profit-seeking. It was the deliberate outcome of a society that had learned to turn adversity into innovation, risk into structure, and faith into finance. The ships that left its harbors carried not just cargo, but an idea, the idea that commerce, properly organized, could be the foundation of civilization itself. In the centuries that followed, that idea would circle the globe, leaving in its wake both prosperity and peril. But in the beginning, in the age of the flight and the stock ledger it belonged to, Amsterdam alone, the first city to understand that the true empire of the modern world would be built not on land or sea but on the invisible tides of credit and confidence.